briefing all of our stocks on ET Now. Thank you for staying with us. Hemang Jani is with us as well. Hemang, I want to ask you about the banking sector before we go any further. SBI shares down almost 4% this week because of the reaction to those first quarter numbers. Investors were largely unnerved by that steep rise in non-performing assets. Now, do you expect the asset quality of SBI to deteriorate further towards the year because of those monsoons?
Clearly, in this kind of a macro environment, the PSU banking space will have its own challenges. Also, the fact that the government would be actually looking at announcing some kind of bailout package for the drought-affected areas, and PSU banking space could come under stress because of that as well. So we think that in this kind of an environment, it would be safe to actually stay away from the PSU banking space. Though in terms of valuations, it is looking quite reasonable. But one does not really know how long this environment will continue to remain like this. And particularly if you look at State Bank's numbers, the NPLs have definitely increased quarter on quarter. And though the base was much lower, the overall numbers don't look too promising. And one doesn't really know how long this scenario will remain. So we think that it will underperform the entire banking space.
A lot of our investors have SBI in their portfolios. But what do you recommend they do right now?
We think that, they should actually hold on to the stock for next about 2 to 3 quarters. One should be prepared to see some underperformance, but it's a high beta stock. So whenever we see some positive news on the interest rate front and whenever the NPL cycle will bottom out, that's the time when a stock will start performing.
And in fact, we have a question from one of our viewers. Pramod is listening. He wants your stamp of approval on whether or not it makes sense to buy SBI shares at this level. What would you recommend?
I think this is not the best time to enter SBI because there is a case for some more underperformance. Though it is looking pretty reasonable in terms of valuations, we think that at any possible correction of anywhere from about 5 to 10%, one could definitely look at entering into that stock.
Right, since we're talking about the PSU banking pack, I want to bring to your notice the fact that last time you were on the show, you recommended Bank of Baroda when it was trading at 672 with a target of 875. That stock is currently at 627. We know it doubled its provisioning for the first quarter. You also recommended the Central Bank of India when it was trading at 79 rupees. It's down to 70 rupees. We know slippages had risen to 1,500 crore rupees nearly from about 600 crore rupees in the previous quarter. So a lot of bad news within that space. I want to understand from you, do you stand by those two recommendations?
We think that these two banks are looking okay in terms of valuations, and in fact Bank of Baroda has outperformed the entire sector because the sector has actually corrected quite a bit and overall performance of BOB has been relatively better. But as I said before, the entire PSU banking space is likely to remain under stress because of the challenging macro environment and because of the way the NPL cycle is actually stretching and the government is not really able to take any major policy decisions. So yes, these two stocks are looking quite attractive, and if investors have bought into them, they can definitely hold for a while. We think that it will take about 6 to about 12 months for this stocks to really move up in a meaningful way.
Standing by those recommendations, let's move on to our lucky viewer with his portfolio question. Now, every week, our guest takes a look at the portfolio of one lucky viewer and tells him what he should be holding and what he should be selling based on his time horizon. This week, Ajneesh is our lucky viewer. He sent in a list of the stocks that he has in his portfolio. He has 100 shares of Bank of Baroda, bought at 699. Would you recommend he holds on to it?
We continue to like the stock, and it has done much better compared to the entire space. But we think that given the challenges that the PSU banking space is facing, it may languish for probably a quarter or two. So he can hold on to it for a while, and if the stock corrects another 5 to 10%, he could look at adding more so that his average cost comes down to a more reasonable level.
Punjab National Bank, Hemang, 100 shares bought at 762. Two stocks from the PSU banking pack. Do you think he might want to diversify at this point?
If he has both the PSU banks, I would suggest that from PNB he could possibly move to a private sector bank, either maybe Yes Bank or an IndusInd Bank, because we think that in this kind of an environment, that space is a relatively better place, and Yes Bank has been reporting good set of numbers and has a much better upside potential. So it would make sense to shift from PNB to Yes Bank.
Here's another stock that you mentioned earlier on the show, BHEL, 400 shares bought at 215. Now, you did say BHEL is not one of those capital goods stocks that you're bullish on. Would you recommend he gets out of it?
We think that moving from BHEL to L&T would be a sensible, decision, because the L&T has a much diversified portfolio, much broader projects, and overall, order inflow has been much better. So, in this kind of an environment, L&T would be a better choice.
And his last holding is some cause for concern. He has 1,500 shares at the Shipping Corporation of India. He bought it when it was at 76. It's fallen drastically over the year, ended the week somewhere around 54. Would you recommend he holds on to it, or should he just be booking his losses?
I think overall fundamentals of Shipping Corporation have not been that impressive, and because of the fact that the government is also not in a position to do anything major in terms of policy action, it makes sense to actually move out of Shipping Corporation.
All right, Rajneesh, we hope that helps. Now, if you'd like to have your portfolio looked at by our guest, send it to us on this email ID. It's at the bottom of your screen right now. Let's move on to Hemang's stock pick of the week. He's picked United Phosphorus as a good investment option for retail investors like you and me. Take a look.
United Phosphorus, or UPL, is one of India's largest chemicals manufacturer and specializes in making generic versions of agricultural chemicals. And with about 80% of its revenues coming from international markets, the company has emerged as the third largest generic player in the world. The company's first quarter revenues rose almost 20%, helped by a 21% growth in export revenues on the back of a weak rupee. UPL's management is expecting a 15% growth in FY13 revenues and an 18 to 20% rise in margins. However, with the monsoon playing spoil sport, market men say that the company may fall short in its guidance. Also, margins are expected to remain under pressure in the near term as UPL bought a low-margin Brazilian company, DV Agro. But food security is a top priority for most governments, which is why 85% of market watchers have a buy call on the stock despite the rainfall concerns.
That was United Phosphorus, third largest generic player in the world. Strong numbers. Hemang, help us understand how the monsoons will impact this company.
We think that, yes, bad weather conditions both in India and globally can have some repercussions on the overall growth. But because of the fact that it is a much better geographical presence across the globe and it has a very strong product pipeline, we think that bad weather can actually affect the performance only by a couple of percentage points. And last year also the weather has been challenging both in India and some of the other parts, and the company has delivered relatively good performance. So we think that it will not have a major implications for the overall performance.
Yeah, like you said, a lot of the sales, in fact 80% of the sales of this company happen overseas. Now, while that means it benefits from a weaker rupee, when the rupee turns around and starts to strengthen, isn't that a risk the company faces?
We think that this company is a natural hedge because, some of the raw material that they are using, they are importing from China and some of the other countries. And, they have a very wide presence across the globe. So, we think that rupee movement per se will not have any major implications, and which is what is reflected in quarterly performance. There has not been any major losses on account of forex as such.
Let's take a look at the valuations. Price earning of 8 to 9 times of the 2013 estimates. Do you think that's a fair value to get in at?
We think that this company is available at a price earning multiple of about 8 to 9 times 2013. And for a company which has a global presence, very strong brand, and return on net worth of about 14 to 15, it deserves a much higher PE of about 12 to 13. So we think that it is looking reasonably priced.
All right, tell us finally, what are your targets for this stock?
We think that it can, give upside of about 35 to 40% over the next 12 months.
United Phosphorus, Hemang Gani's recommendation for the week as a stock we should have in our portfolio. After the break, we're going to answer some more queries that you sent in during the week. Remember, the email ID is at the bottom of your screen. Stay tuned.